Good one, you are welcome to this video on Microsoft Excel. My name is Amizer. In this video I want to show us how to do an account statement using a Microsoft Excel spreadsheet to draw up our account statement as well as the running balances at the end of the day. So I shall be using a PowerPoint work to explain what an account statement is, how it is drawn up, the formula that we use to calculate the running balance automatically anytime that we have a transaction value on our account statement. Our general idea of account statement is our bank account statement and other transactions that involve us as well as other party that we are having business relationship with. So I shall be using a Microsoft Excel to explain that. Here I want to explain what I mean by an account statement. An account statement is a record of financial activities showing a list of transactions involving two parties or individuals as well as closing or running balances at the end of the period at any point in time. The running balance or closing balance may be in the surplus or deficit, indicating what is owed or owned by the parties involved. There are types of account statement that we normally encounter on daily basis. We have bank account statement in which you are having a record at the bank of all the transaction that is taking place in your banking records. We have creditor account statement, we have debtor account statement, we have a record inventory account statement. So in this work I shall be explaining how bank account statement is drawn up as well as the running balances that we normally see each time we make a withdrawal or we have a credit transaction in our bank account statement. So let me move on to my Microsoft Excel spreadsheet and explain what I mean by an account statement. Account statement involves dates. It has details that is describing the transaction, that's the nature of the transaction that involve you as well as the other parties. This is how it is recorded in banking statement. The same way it happens in other instances that I've cited, like maybe you have an account statement with your creditor, you have with your debtor, you are the one that you keep for your inventory as it's coming in and value going out and so on and so forth. We have terms that are generally used. We have, they normally call it inflow, that is what is coming to you, and when the value goes out we refer to it as cash outflow or value outflow. Then in banking system there are a special technology that they normally use. They use debit and credit. When you have something coming into your account, they usually refer to it as a credit transaction. When you make a withdrawal or you make a payment out of your account is outflow. So at the end of the day you are going to have a balance, that's whether you are still having an excess, that is surplus, or a deficit. Let me key in values into each of these columns and explain how it is done. So I shall start from the date column. Let's assume that today is this. Then I don't mean most of the numbers and the values I shall be using in this works, they are imaginary number just for the purpose of explanation. So let me quickly come up with values on each of these columns and cells so as to save our time. Now that I've come up with the dates in which the transactions that I shall be using to explain this work to take place, so let me go to the details column and key in data. onto the detail column as well. Let's assume that on the first day of the period we have opening balance, which is normal. That is, you have opening balance in your account at any point in time, be it surplus or deficit, whether your account is overdrawn at that time or you are still in surplus. Opening balance from source or whatever. Then you have, let's say, customer receipt from customer. You have receipt from another customer, then you make payments. Let me quickly speed this up. Yes, I've been able to come up with data on the details column. I now move on to the total cash inflow and outflow column, key in values, and go back to the balance, how balance is calculated before we end this video. So let's say the opening balance is an inflow, or it could be outflow in this case when you have a deficit. So, and let me put on value on each of the cells. So a running balance, automatic, being a running balance brought forward. So I have 500,000. I have 230. Let me quickly come up with value. Here is payment. Let's say this BOS gas is our creditor. We make some payment to BOS gas. Let me speed this up. All right, I've been able to come up with values for both inflow and outflow column. It now remains to go to the running balance to show how formula is activated on the running balance column and how it is calculated automatically each time a value comes to the either of inflow or outflow column. What we do is that we want a situation where the running balance will be calculating itself, because we can't be getting our balances manually each time a transaction occurs. So what we do is that we have to activate a formula on the running balance method, and how that is done is in two ways. We either write the formula manually or we apply the inbuilt formula on Microsoft Excel. I shall demonstrate the two methods in this video to show us how. What we do is that this is the column, this is the cell next after the running balance, where we have, as we have a opening balance of 670,000. The next, since we have inflow after it, is that the next inflow should be added to the opening balance to make it whatever it should be, and the next cell should carry the balance when it gets to its own turn. How is that done is what I want to do now. So we all know that inflow is an addition to our account statement, while an outflow is an expenditure. So what we do is that whenever a value arrived in the inflow column, is an addition to whatever the running balance that we have, while the outflow value, whenever it comes, is a kind of expenses, so it's a deduction. So we have to add the opening balance to the next immediate next inflow and remove the value in the immediate next cell to arrive at the value that should be our next running balance. So how we do that manually is that we key in equation sign. Equation sign is a calculation command to Microsoft Excel. Whenever you want to do a calculation in Microsoft Excel spreadsheet, so the first thing you must do first of all, whether manually or by calculation by formula inbuilt onto the system, is to get equation sign onto whatever cell that you need your calculation to be done. When that is done, Excel automatically recognizes that a calculation is about to take place. So anytime you have equation sign inserted into any cell, the Excel is ready to perform a calculation. So anytime you strike your cursor on any cell henceforth, it will automatically pick the address of that cell. Like the running balance, which I want to add and subtract some cell from. So my immediate next inflow is this. So I'm adding the running balance that we brought forward and add immediate next inflow. It doesn't matter whether it is the zero value that is there, and remove the immediate next, remove the immediate next outflow cell and click enter. You can see if you pick your calculator and do it manually, it's going to give you 670,000 plus 500,000 is 1,170,000. So in the same way, you can perform the same thing for the next cell to get the running balance for the next cell, which I advise that we should not be doing it manually each time we want a running balance. And that is the essence of this work, to show how running balance is automatically calculated each time a transaction takes place on our account statement. So in the same way, you can apply the formula. Let me delete this. You can pick formula auto sum. The moment you pick auto sum, you can see the equation sign that I said is necessary anytime a calculation is to take place is already picked automatically. So let's assume that you are not adding the opening balance. So you have instructed the system to add up once you pick auto sum. So add the auto sum by yourself, minus add immediate next cell, which is inflow, and remove immediate next outflow. Press enter. You can see that we have arrived at the same answer. So in order for us to avoid doing it manually each time a transaction occurs, there is a system that we use to do it easily. So we call that autofill 2. Autofill is a kind of copy and paste system in Microsoft Excel, in which you form an autofill on a particular cell, and it enables you to repeat whatever you are having in that cell. A formula has already been written in this cell, this current cell I highlighted. So, and I want the same formula to start copying itself downward. So what I do is that I introduce autofill handle. Autofill handle is gotten by placing your cursor at the bottom end of whatever cell you need an autofill to appear. It's a plus sign. You can see this is my cursor normally. So but once I position it at the bottom end of a particular cell, it forms a small plus sign. So press your mouse and drag downwards, and you will see that the value will be following itself, automatically calculating itself. So we have activated a running balance formula on this account statement. Each time a transaction occurs on this activated range, the balance will just be calculating itself automatically. So let's assume that what I'm saying is, let's assume that a value comes to this empty cell. You will see that the running balance will change henceforth. Can you see? Same way in outflow, outflow side, if I introduce a new value, you can see exactly how running balance is automatically. That's why you see whenever you make a transaction, your bank statement, whether withdrawal, whether a payment, whether a credit arrive in your account, the balance that you have currently will just drop onto your alert or whatever at the same time instantly. That is how it is calculated. With this, I believe I've been able to explain how an account statement is drawn up, and I hope that we have all understood what I have done. Thank you for watching this, and I'll see you in my next video. Please like this video so that more and more people can watch it and benefit. Thank you.